Hey everybody, it's Ron from Ron's Basement. Thank you, and you, and you, and you, and especially your favorite person, you, for joining me today. I have a portfolio update for you, and I'm going to share a little more information, a few more thoughts that I have about the precious metal mining sector, okay? Hopefully, my intention is to connect with you and give you some good information. But first, I want to talk about this. Why listen to me? Why listen to Ron from Ron's Basement, right? There's no fancy Wall Street background behind me or anything, real crazy fancy about what I do. I want to give you a little bit of my background and a little bit of my track record so you understand who you're listening to when you choose to listen and watch my videos. So, if you're still watching, I can tell you about myself. I have a degree in accounting. I worked for a Big Four public accounting firm briefly out of college. And I've been investing since I was about 18 years old, okay? I understand financial statements, which I think most people who invest really don't have a real in-depth understanding of how financial statements work, how the money flows through the business. I'm not putting anybody down and not saying that those people shouldn't invest. I'm just saying that I do understand that. And although I don't obviously exclusively rely upon that type of analysis for my investment decisions, I think that when you're looking at companies and valuations, it can be very, very helpful. And right now in the gold mining, precious metal mining sector, there, from a financials perspective and a value perspective, there are some outstanding opportunities, outstanding values. I'll get into more of that later. My track record, I'll be real honest with you. I've found some really, over the years, great opportunities, okay? I'm going to swallow my pride and tell you that on most of those most of those situations, there were stocks that I bought, stocks that I knew were a great value, stocks that I did an incredible amount of research on. Unfortunately, most of them I didn't hold. I sold way too soon. Huntsman Chemical during the great financial crisis in 2008. One most recently, and you can check my videos, Antero Resources. 2 years ago, folks, that was my primary focus, Antero Resources. AR is their symbol. I was recommending it. I was making videos about it when it was selling for anywhere between, let's say, $1.80 and 80 cents per share. I got out of it. I did make a little money. However, if we had held on to that over the last 2 years, it's now trading. I looked yesterday and my heart sinks when I look at it, but it's trading near $20 per share. So that would have been depending on where you measure it from, anywhere from a 12 bagger to a 20 bagger, 20 times your money on that investment. So not everything that I get excited about does that great, but if you look back at my previous videos and companies that I've recommended, some companies I recommend staying away from because of their financial condition, one of which is AT&T, which we actually own a few shares in, and 3M, which is another one that we own some shares in, but don't want to sell for tax purposes. But when you compare their financials to the financial statements that we have currently, the gold standard, pardon my pun, of financial statements, which is now the precious metals mining industry. So, look, I don't have a crystal ball, but I do know how to look and find value, and I try to find value that I think has a good opportunity for things to change in a positive manner in the future. To me, that's a like an asymmetric risk type portfolio or profile. The gold mining companies right now, they're selling at the basically book value of the assets of the company. So could they go lower? Yeah, but Could they go much, much, much higher if sentiment improves or their production improves or the price of gold improves? You betcha they could. They could skyrocket, okay? They could go up 3, 4, 5 times in value, whereas on the downside, the risk from here, where we are right now in fall of 2021, might be, anything can happen, right? But when you realistically look at the the amount they could go down versus how much they could go up, it's a pretty good risk profile and one that I'm willing to take. Okay. Thirdly, skin in the game. Yes, I have skin in the game. Okay. I am a person who does not like debt. Okay. I hate debt. Debt is the currency of slaves, and I don't want to be a slave. So I have no debt in my life. No car debt, no house debt, no debt, period. I don't owe anybody nothing. Okay. I'm not a super rich guy, but the way that I've kind of got my my family's financial situation structured is that, maybe roughly 25% of our net worth is in our house, real estate. Another 25% is in cash or cash equivalents, roughly. Okay, so that's like 50% of our net worth, and the remaining 50%, most of it is in precious metal mining stocks, because I think that's actually safer than keeping that money, let's say, in the bank. And to me, it's a lot safer at this point than having that money in Apple stock or almost any other stock, even the local utility stock, Ameren UE here in St. Louis. I mean, when I look at their financials and price to earnings ratios and compare that to what you get in the gold mining sector, it's like, I don't know. There's, the gold mining sector relative to any other sector is the sentiment is so low that the value is, nothing compares. Okay, nothing compares. So if you're still watching, thank you. I'm going to dive into my portfolio. I haven't made a lot of moves in the last 3 or 4 months. Okay, now I will make moves, and I kind of go through spurts where I'll do a lot of trading. So I want to give you an update in terms of what I'm holding right now, because sometimes people look at some of my older videos and say, like I used to own Pure Gold Mining. I used to own Gold Mining Inc. I used to own Fortitude Gold. I don't own those anymore. But what I do own now, of that money that I have in the precious metal mining sector, 25% of it is in Equinox Gold. Equinox Gold. Okay, Ross Beatty Company, Christian Milau, CEO, Greg Smith, President, Rylan, I don't know her last name, sorry, Rylan, is the investor person who talks to investors, crazy investors like me. Best company, I don't know, I just, from almost any metric, best company on the face of the earth. Is there risk? Yes, they had problems with their mine in Mexico this last 12 months. There's always risk. There's risk with anything, right? But when you look at, to me, all the boxes I look at, inside ownership. I think the stock's up today, but you're basically still, if you buy the stock, you're paying the value of the assets, right? The market cap of the company is roughly equal to the net tangible assets of the company. That means the market cap of the company is equal to the book value of the assets after you take out the debt, okay? So the equity is, it's just a great opportunity. And I'm going to skip forward to my next almost similar holding, about another 25% of my precious metal mining stock money is in Fortuna Silver. I don't know why they call it Fortuna Silver. It's Fortuna Mining. They've become more of a gold mining company, but same thing. You're buying that stock at a market cap that's equal to the net tangible assets of the company after you take out the book value of the assets of the company after you take out the debt, which is the net tangible assets. Both of those companies are well managed. diversified geographically. Okay, there is some probably geopolitical risk, a little higher degree with both of those companies. You've got Africa, Argentina, but if you look at those two, what I like about it is when I combine those two, they're spread out all over the world. Okay, including the United States, including Canada, including Mexico, including Brazil, including Africa, including Peru. But the cool thing about both those companies is, I'm going to say it this way, you're getting paid to wait. Okay, they are both making a profit right now, a handy profit. At $1,750 gold, they are both making net income and positive cash flow. Okay, and you're buying these stocks for the basically the book value of the asset. Okay, they both also are growing. They both have legitimate, solid, funded plans to increase their production going forward. And don't forget, if you get increased gold production on top of an increased gold price, you get a rocket ship. Okay, sure, if you get decreased production and a decreased gold price, which could happen, but I think the odds of it going the other way, the positive way, are much greater. And if and when that happens, it's a very good thing for the stockholders, especially if sentiment. I like to joke around. I'm in my basement. The sentiment for gold mining stocks is not even in the basement. It's in the dirt below my basement floor. Okay, it can't get much lower. It could maybe stay where it is for a while, and maybe it could dig a little further, but it gets harder and harder to dig lower and lower once you get below my basement floor. Okay, so basically those two companies, they don't pay dividends, but if you consider the fact that they're bringing in cash, bringing in net income, you're getting paid to wait, right? That's the way I look at it. Okay, my third biggest holdings are about another 25% of the money that I have invested in precious metal mining stocks. First Mining Gold and Brixton Metals. And people are probably thinking, oh, why are you oddball, blah, blah, blah. Well, let me tell you something. What I like about both of those companies, yes, they are developers, explorer developers, okay? They're both in very safe, very popular geographic jurisdictions. In the case of First Mining Gold, okay, they have three big partnerships right now. Number one is in Newfoundland, hot area, that they're going to own like 36%. They have essentially, the way I calculated, a 36% interest in that project in Newfoundland. They have this thing called Pickle Crow, which is a partnership with Agnico Minerals. The way I calculate it, they have about a 27% interest, maybe even higher, in the Pickle Crow project, which is this red hot. The more they drill, the more gold they find type opportunity, again, in Canada. Thirdly, they own 15% of Treasury Metals, which I've heard referred to as the most buildable mine in Canada. So they have these three partnership projects, things that they'd owned 100% that they farmed out. They've got a ton of cash, over $30 million in cash. And when you factor in the value of those three projects in Canada, plus the cash, okay, it eats up a huge part of the market cap of the company. But there's more, okay? They also own a project called Cameron, which is a 1 million ounce resource in Canada, and a couple projects in Quebec. Again, another kind of hot mining exploration area that also has another 1 million ounces. On top of that, they have the thing called Spring Pole, which, when it's built, will be one of the largest open pit mines in Canada. This is a very buildable project. It is the resource is under the shallow bay of a lake, which everybody's like, oh my God, it's under a lake. Well, I don't know. Anytime a big open pit mine is built, it's disruptive to the environment. The company is very responsible. They've done like a decade's worth of environmental work, from what I understand, And they hired a guy named Steve Lines who just wrapped up getting the Hard Rock, I think it's called Greenstone now, mine permitted up in Canada. This guy's worked with these types of scenarios many times. I'm not going to go into all my thoughts on spring pole, but basically First Mining gets no value for spring pole, okay? And that is a huge oversight by the market, because in the coming 2-3 years, as this thing gets moved through the permitting process, and if the gold price goes up, which I think it will, and sentiment improves, and people start to realize, like, wow, this is really a buildable mine, and you've got like one of the top guys in the world for getting these things permitted, the Steve Lines working on it, and First Mining has been expanding their land package around spring pole. I mean, it's ridiculous. I mean, I think they're getting like, I don't know, maybe like somewhere between 5 and 10% of the net present value is what they're getting credit for in the share price of the company, maybe even lower than that. And really, it should be more like 0.5%, not 0.05. It should be like 10 times higher. I'm sorry, it should, because I've really dug into this, and I know that to be the case. Whew, sorry, went on too long about that. The next part of my portfolio, Brixton Metals. This is what I like about Brixton Metals, okay? They have this big project in Montana called Hog Heaven. It was previously permitted in the 80s. It's silver, gold, copper, something else. I don't know. But HPX, Robert Friedland's company, signed a big partnership agreement with them last year on this thing. Okay, that's a top-notch company, HPX, and I think now it's under Ivanhoe Electric. But like a top tier company signed an earn-in agreement with Brixton on this project. So you've got that going. Then Brixton also owns, I think it's one of the largest land packages in the Golden Triangle, way up north. And they have 2 big projects up there, Thorn and Atlin. I may have that wrong. Up in Thorn, we're waiting on some deep drill holes, like 1,000-meter plus deep drill holes in their copper porphyry target up there. Then they're doing some shallow drill holes in, I think it's Camp Creek, where they've been finding visible gold. Atlin, they're not even doing anything, but they have so much. They have, I heard somebody say they're spoiled for opportunity up there. They have so much, okay? And then they also own this cool little silver cobalt project, Langus, which is also in Canada. So what I like, to kind of bring it back to both Brixton and First Mining, is these are explorers, these are developers, but it's all in North America, all in Montana and Canada. So then to round things off, I've got some a small position and some call options on Equinox, but also Kinross and Barrick. And those are long dated. They're January 2023. I have been annihilated on those. I bought them like 3 months ago, but oh well. And I own a little bit of Fosterville South in Australia, and some Treasury metals. Those are smaller positions. My big, the majority of my precious metal mining portfolio is Equinox, because I feel so confidently about the company. Fortuna Silver, because I feel so confidently about the company. That's about half of my precious metal mining portfolio. And then another big chunk, kind of the next 25%, is mostly First Mining, with a decent sized chunk of Brixton Metals. And then the remaining 25% is kind of in these long dated call options and some Fosterville and Treasury metals. So there you have it, folks. If you're still watching, thank you. I just get people sometimes ask me questions about my portfolio and stocks that I've made some videos about in the past. So I just want to give you an update. That's where I stand. That's my thinking on this. Do I think that they could go lower? Yes. I mean, I know they could go lower, right? But I just think that the odds of them going lower by, let's say, 30, 40, 50% are about the same odds as them going up by 5 times. Okay, let's be honest with you. I could be wrong. I'm wrong all the time. And I feel more safe having that money in precious metal mining stocks than I do having it in cash, and in particular having it in the S&P 500 or tech stocks or something else, because everything is so overvalued in that area and everything is so undervalued in the precious metal mining sector. Thanks for watching. I hope you enjoyed my video. I hope you maybe got something out of it, and I hope you have a great day. We'll see you soon. Thanks.